Here is that 60-minute chart that you can see right here. And you can see all the way on the left, you will note that big gap on the upside. The tax plan was passed, and the Eurozone celebrated the Senate, and all the stocks were moving up here overnight on Monday. And you can see they kind of moved up and flattened out. But then the NASDAQ reversed, and some big selling came in here, and all the indexes reversed, and it appeared the tax plan party was over. We had a big reversal, some serious declines in a lot of the stocks in the NASDAQ, and you can see in here that, well, it was a lot of selling that came in the market, and one of the few days where it closed weak. Well, Tuesday it did the same thing. Rally failed again, which is really rare for 2017. There was a big bounce in the NASDAQ early in the day, but that couldn't hold it. The NASDAQ really had seen the worst of it for the week by that point. ADP comes out on Wednesday, up $190,000. The estimate, 190,000 jobs. The estimate was 185, and the manufacturing sector was pretty strong. That gave a lift to the market early on as the NASDAQ again was bouncing, but you could see it flattened out during the day. We had Thursday, world equity markets were really soft at this point. Bitcoin at that point hit about 15,000, but then when the market opened, buying came in, and again it was the NASDAQ rebounding after it had taken a pretty good hit to the downside, but that rally couldn't really hold. There was discussion that there was a deal coming about the debt ceiling, and sure enough it came late on Thursday. The debt ceiling problem is essentially kicked down the road by about 2 weeks, where they have to tackle it again. Man, oh man, you know, if I was in charge, they would never raise that debt ceiling. They would have to come to sensible governance and to run this economy with the money that they have coming in. Of course, that's me, who are quite conservative when it comes to fiscal issues. So the debt ceiling helped, and you got the uptick right over here. Brexit talks had a breakthrough. The Eurozone banks started to move up. FTSE up 1%. That was driving markets up here. Payroll stronger in here. No real wage growth in there. And we had a market that was turning up. But now here, as we move into just an hour or so to go in the day, we see markets stalling and rolling over just a little bit right there. So again, it's an up day right over here. Overall, the markets basically big down, a somewhat return back up, and barely a net for the week as we look at that. So that is a look at the 60-minute chart of the S&P 500. For the week, the stock market, as I said, narrowly mixed. S&P, NASDAQ, Dow Jones, pennies to the upside. The Russell, small to the downside, as that took a pretty good hit early in the week. What we have in here is the S&P 500 pattern overlaid by the Russell pattern. That green one right over here is the Russell pattern. This blue dashed line over here is the S&P cyclical rhythms. These are the ideal rhythms. There's always variances in them. You can see in here that this is where the Russell was due to turn up, and that kind of is driving the market right over here. So our question is it going to follow the Russell and then turn over and have a big decline over here? Or is it going to follow the S&P 500, come down early in the week, rally, and then come down over here? So you see the Russell and the S&P are due to fall out over there. But the question is really over this next week, and you know, those people that have option positions on that need the market to fall, that have been writing me, this is kind of a convoluted type of analysis that you're seeing in here. We see a choppy period here over this next week, and then after that the risks pick up out over here, and this is a period of extreme risk that we're going to be getting into out there in December. Nobody expects that in December, of course, but these patterns are suggestive of that. So we're going to call this next week an early decline and then another attempted rally right over there. That's what the pattern suggested. There is minor support here at around 2637 right there. that would be a pitifully shallow decline if that happened. And this overall decline would be just another what we call right-hand translation. In other words, it moves up for, like 2/3 of this cycle and then has just a pitiful little decline. Well, that's exactly what happened here, and then moved up again. And then it has another rally. So the depth of this decline is important, and the amount of this rally is important. We're just going to look for a choppy week, a test of 26.37, potentially getting down to 26.23 right over here, and that's not really a very big decline when you look at that. And the further we get into December, I think the more risk that we're going to see of a late correction coming up in the next couple of weeks. So that is the look at the S&P 500. We're going to call modest decline in here that really doesn't give a lot of downside. Boy, I hope I'm wrong and they just accelerate to the downside and then solidify the pattern that we see in here. So you can see that in the S&P 500. NASDAQ, I've overlaid the same chart right in here. You can see the how the Russell overlays to the NASDAQ and the low that was set in here. We're looking for a pullback early in the week there, and then moving up again. Could get as low as this low right over here at 26.32. It doesn't have to. It could stop here in the slim ribbon and then again follow that Russell pattern, have some choppiness right in here before we get into this much riskier period over there. So choppiness is what we're looking for. I hope it's a wide chop and we get some depth of decline and it's much more tradable. We're going to call it a minor decline into midweek and then some kind of a recovery, that being setting up a time period where the risks start to increase even more about a week out. The VIX, VIX, I didn't even plan on putting this one up. It is just unbelievable how it is following this pattern right in here. You could see that this dip right here is getting right near the end of it. So we said that we thought the stock market would fall for a few days. We think that the VIX will then get a pop. Maybe Tuesday through Thursday right in here is then what we're looking at the VIX. The VIX has got very consistent cycles, and we're going to look for the overall condition of the implied volatilities to give us a much better trading opportunity coming into the end of this year, beginning of next year. We still think that we're going to see implied volatilities jump very significantly this year before that's over with. So you could see the nice rhythm in there, and maybe another day or two, and then we can see implied volatility start to move up again. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel and also go to AskSlim.com and become a Level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them.